Hello and welcome to a Fortune and Freedom special. I'm Kit Winder and today I'm joined by four of our premier editors here at Southbank Investment Research because I've asked them to talk about predictions for 2025. We're going to take each of them in turn, but first I'll just introduce them. We've got Sam Volkering, our tech and cryptocurrency expert, Nick Hubble, our international man of mystery, James Allen, our energy expert, and John, our macro expert. So Nick, why don't we turn to you first? Your prediction is pretty interesting. We're talking the assassination of Donald Trump via a Liz Truss-style engineered bond market meltdown to make him what you call a lame duck president. That's quite a mouthful. Can you take us through it?
Yeah, it's not that surprising to people in Europe, but I think it's going to come as a shock to people in the US. Over the last 15 years or so, we've had governments in Europe repeatedly get elected on a sort of big spend, tax cut, that type of platform generally. And what tends to happen to them is they run into something called the Troika, the EU, IMF, and most importantly, European Central Bank. What happens is that the Troika disapproves of what this new government in places like Greece and Italy wants to do with its budget. And the way they manipulate the government is by allowing the bond market to crash. So if you remember, especially with Greece and Italy, what would happen is the government would announce some sort of policy and then the bonds would start to crash, or the bond spreads, which was the difference between Greek government bonds and German ones, or Italian ones and German ones. And so these spreads would rise, and then the government of each different country would give in to the European Central Bank and the rest of the Troika and accept whatever the European Central Bank wanted. And we had at one point even in Greece, the government ignore a referendum that it actually organized because it was so scared that the bond market would crash if they actually followed on and accepted the referendum result. In 2018 in Italy, all this came to a head as well when the government was specifically elected to basically battle out with the Troika. And in the end, the bond market just crashed too often and they gave up, they gave in. We've seen many times the finance ministers or the prime ministers or the presidents quit or get fired and been replaced by someone from Goldman Sachs, usually a banker, who then actually implements whatever the European Central Bank and the IMF and the EU were actually demanding. All this played out in the UK in 2022. So because of the pandemic, the deficit and the debt in the UK became too large. And basically we had the same experience in the UK as Greece and Italy and all these other countries had in the decade before. Our bond market crashed when the government decided to cut taxes. And so we experienced the same story where the government gave in to what the Bank of England decided was the right economic policy. We fired the Chancellor, we fired the Prime Minister, we put in place again someone with Goldman Sachs banking experiences in Rishi Sunak. I believe next year is the year all of this comes to America with President Trump. And I think it's going to be a lot more like Liz Truss than it was for Matteo Salvini or for Tsipras in Greece. I think that the Federal Reserve is going to allow bond markets to crash around about the time when President Trump announces his big economic policies, probably tax cuts. And I think the intention will be to pressure the president into accepting whatever the Federal Reserve's economists believe is the right policy. The problem is that this risks a bond market crash like happened in the UK, where pension funds almost went bust. So there's going to be this standoff that's already begun between the Federal Reserve and the president, where they argued about whether the president can fire the chair of the Federal Reserve, and they had a big public spat about it, which is exactly what happened with Liz Truss and Andrew Bailey before Andrew Bailey got the upper hand in that battle. I think that President Trump will be abandoned by the Republican Party when all this happens. He'll be painted as just like Liz Truss was, clueless, not understanding what basic economics is. I think the Republican Party will basically make him what is usually referred to as a lame duck president at the end of your term. So after your successor gets elected, you become a lame duck president because you can't do much. Well, I think Trump will be a lame duck president for most of those 4 years that he's in power, because he will be just like Liz Truss was, pretty much framed as someone who just doesn't understand the bond market, doesn't understand that deficits can cause these sorts of crises and crashes. And all this will leave him completely isolated. And those in the Republican Party that have always sort of been a bit ambivalent about President Trump because of his garish qualities will finally get their opportunity to get rid of him, or at least sideline him for the remainder of his 4 years. And perhaps they'll even manage to get rid of him And just to be completely clear, I'm not saying they're actually going to shoot him or assassinate him in another way. It's all about whether they can undermine his politics.
Nick, that was a great run through, but there's a huge amount we could tap into. But to keep things reasonably simple, I guess my question would be, given the enormous size of America's debt and the debt problems that led to what you were talking about in Greece and Italy and then in the UK in 2022, what are the financial economic implications if the Federal Reserve in America does get its way and stops Trump doing what he wants and allows the bond market to run away and dump Trump as you say you think it will?
Yeah, it depends how hard he goes for it. So we had in the UK, within a matter of days, Liz Truss gave in. She fired the Chancellor very quickly. And also we had the pension market meltdown in the UK, which shows the risk of what can go wrong if you allow government bonds to crash. And they've already crashed in the US, so things are already on edge. You might expect more of a banking crisis, as we saw in 2023 in the US, because of government bond prices crashing. So that could repeat. But the real worry here is that you get something really global, a real global crisis, because American government bonds are effectively the bedrock of the financial system. If they crash badly enough in price or they become seen as risky, that really removes the foundations of the entire pyramid or house of cards, or however you want to think about the financial system. So we can't really afford prices there to crash or to become unstable. I don't know. It's sort of like a Mexican standoff, right? Because the Federal Reserve is risking a financial crisis by trying to make Trump look like he doesn't know what he's doing, by trying to undermine him, just like the Bank of England undermined Liz Truss. So the question is how far they're willing to go, whether there's some unintended consequences. But the point being that whenever Trump is making some sort of an economic announcement over the next few years, especially tax cuts, especially if he goes after the Federal Reserve in any way, you should expect serious instability in financial markets. You should expect stock markets to go up and down very wildly, companies to fail, especially banks, possibly insurance companies, possibly pension funds. So just general financial chaos around those key announcement times. The political cycle is going to matter extremely in the US to the global investment, all of the investment markets around the world.
Yeah, well, with the big theme of the last couple of weeks has been US exceptionalism. The size of the US stock market is sort of 60 to 70% of global stock markets, however you want to measure it. And Nick, we're going to come back to you, I think, but a lot of what you're talking about is also going to tie into what John talks about, and I think there are implications for you too, John. Now, your prediction for 2025 involves a little bit of time travel, because you're predicting that what we're going to discover next year is something that's already happening this year, which is that the US is already in a recession. Now, what makes you think that you are right and that the US data and statistics agencies are wrong?
Well, I have a long history of looking behind the headlines of data to try and tease out what the trends really are. And when you do that with the current set of data that we've produced in the US in recent months, you see tremendous weakness when you look behind the headline numbers. I mean, outright recession probably started maybe as early as the second quarter, more probably in the third quarter. The private sector in the U.S., and this is actually somewhat acknowledged now, the private sector in the U.S. has been in recession all year. Private sector jobs growth, if you look at full-time jobs growth, has been outright negative. The U.S. has lost over 1 million full-time private sector jobs over the past year. That is a recession figure. Now, what's been carrying the headline data has been the public sector. You have had hiring in both federal and state and local levels of government in the U.S. over the past year. However, a lot of that jobs growth has been part-time, and it's also not what you would call higher quality, higher productivity, higher paid work. A lot of it's in education, a lot of it's in healthcare, and yes, those are essential, services and whatnot, but it's not really what drives economic growth. And so if you look at the methodology behind how a lot of the headline activity data is generated, there are two flaws in particular as you aggregate up from all the various sort of subgroups. First of all, you chain link data. And what that means is you carry forward the relationships between and across various groups of data through time. Now, economists have to work in this way because they have to work in aggregates. Aggregates have to be defined. They're only ever a best guess as to the actual structure of the underlying economy. And so you chain link your data through time. So you're kind of implicitly assuming that the structure of the economy today is basically what it was 3 or 5 years ago and hasn't really changed a whole lot. And so then as you make your specific estimates for each given part of the economy, you then build up towards that picture. It's also the way that consumer price inflation is compiled, by the way. You assume there is this basket that households buy, and you only make periodic adjustments to that basket as those changes become ever more apparent marching through time. That results in big mismanagement as you aggregate up, mismeasurement as you aggregate up the data. And so my view here is that when we go through the next round of so-called benchmark revisions to activity data, to jobs data, industrial production, whatever it is, you name it, the whole set's going to be revised down, going back maybe a year or more. And that will carry the data into recession territory back as far, again, my best guess is either in Q2, more likely in Q3 of last year. And then the problem is the leading indicators going into 2025. The problem is a lot of leading indicators are nominal indicators. They are not adjusted for inflation. And many people just take them at face value and say, oh, well, that leading indicator is still pointing up. And so it's still pointing towards positive growth going forward. That's not necessarily the case when inflation is elevated. And of course, as we know, inflation has come down in the US over the past year, but remains at a level which is significant when you're talking about the actual rate of real economic growth. And what's really disturbing is when you look at bank lending figures. Now, the fact is that if an economy is going to grow, businesses have to invest and they have to hire workers. I've already mentioned that businesses have not been hiring workers over the past year. They've been shedding jobs over the past year. But what about looking forward? This is where the lending data, the business lending data is disturbing. If you adjust it for inflation, it's been negative for over a year now and remains negative in the most recent monthly data available. So what we've got here, we've got a private sector that's been in recession for a full year already, when measured correctly. And you have bank lending data that points towards that recession continuing into 2025. And the whole data set's going to be revised down possibly. That could cause a general reassessment in financial markets for corporate profitability. Because the fact is that corporate profitability is only going to grow at rates that are consistent with the strength of the underlying economy. And you could have a general reassessment of the outlook for corporate profit growth as a result of everything that I've just mentioned. And look, this market is in the US. You mentioned it, Kit. That market is overvalued historically vis-a-vis itself and vis-a-vis the rest of the world. The US is the outlier. And so the potential for a reassessment here is potentially quite large. And you could see kind of a one-off adjustment to price earnings ratios lower, which could result in a major market correction. So I think that's something to be looking out for as we enter 2025.
It's so interesting. I mean, thank you for going into all that detail, John. And revisions to American economic data, particularly around jobs, have been a big theme in 2024 already. And there has been some political element to it. So I wonder, Nick, maybe we'll come back to you later on and just ask, is there a way to manipulate the data to ruin the president as well? But John, just to stay with you, you mentioned there that the huge American deficits that are keeping their headline growth going, all that spending is really coming through the government and through government hiring. The private sector is cutting jobs, but the headline figures are being kept afloat by the government. But one of the big dramatic sort of political stories of the last couple of months has been the transition, an appropriate word for Elon Musk's move into politics. And his big thing is going to be efficiency. How well he pulls that off, whether we measure it by his previous promises, it's anyone's guess. But his motive is certainly job cutting rather than job additions in government. So are we going to see that central key driver of US jobs, stability or growth get actually attacked from the inside by Elon Musk and the Trump government?
Well, look, certainly they're going to try. There's a lot of energy around this idea that the U.S. government has become unbelievably inefficient in recent years, including sacred cow areas such as the entitlement administration and defense. But hey, you've got a lot of light on this now and some very high profile personalities getting involved in it. So, I mean, they're going to maybe emulate Malay in Argentina and start walking around with chainsaws to, get the message across. They're kind of already doing it. However, as you say, the reality is in the public sector, which doesn't actually produce anything, all jobs are basically service jobs. All jobs are high in headcount and relatively low in productivity. That's just the nature of government work. Call it paper pushing, if you will. And so if you're going to make government more efficient, it means you're going to go after jobs. It really will be going after jobs. Now, who doesn't want efficiency? That's nice. I mean, we all do. But while that process is playing out, it's going to be a net negative for the economy. It's going to be disruptive while it's playing out for the economy. Think of it this way. Even if you're a fairly productive business, every once in a while, you need to rearrange the factory floor. You need to rearrange the assembly line, maybe to incorporate new technologies and to introduce efficiencies. But while you do that, you have to maybe temporarily shut the plant down. You have to move equipment from one side of the plant to the other, and then you've got to reconnect it and switch it back on. So while that is all taking place, the factory is going to produce less. And so if all of this is playing out with the private sector in the US already in recession, it will, at least in the near term, make a bad recession worse. Now, again, maybe that is the best way forward. Maybe the silver lining here is what Joseph Schumpeter called creative destruction, that if you're really going to squeeze out economic efficiencies in the US public sector, you're going to have to go through that. But again, corporate profits are as high as they are today, in part because corporations provide a lot of what they do, goods and services, to public sector directed activities, government directed activities. And so corporate profitability has been held arguably artificially high as a result of all this deficit spending. And so that's going to be a challenge for everyone, public and private sector, going forward. And the stock market is going to have to price in the possibility that we're going to go through a prolonged period of weaker than expected corporate profitability.
John, very interesting to link that US government deficit to private sector earnings, which we hear all about, quarterly earnings projections getting raised again, and particularly in the Magnificent Seven, driving that higher. But thinking about not only the US government hiring people with taxpayers or money or borrowed money, but also those people being employed to pay the private sector for goods and services. A great way to think about that link between the US deficit and corporate profits. So thank you. But we're going to move on now to James, because what we've been talking about with Nick and John so far is about the political changes happening in America and the economic ramifications. There's been political turmoil all over the world. Obviously, South Korea is the big recent story. Syria has erupted. But in Germany, too, was the big story around the Trump election, of that government coalition collapsing and change coming for Germany. And their economy is also in a huge slump, in need of efficiency. And energy is a particularly big issue in Germany. And your prediction centers on that for 2025. Now, you are expecting a remarkable comeback, a remontada of sorts in Germany, because they have made a huge play to shut down their nuclear power plant since Fukushima disaster in Japan in 2011. It's taken a lot of politics. It's taken presumably a lot of very complicated engineering as well to achieve. But you think they're going to manage to turn that around. What could possibly make the Germans change their mind about this? And how difficult will it be to achieve that turnaround in actual, real technical terms?
Yeah, so first of all, I'll say this is a possible sort of black swan scenario. It's not a definite slam dunk. It's not definitely going to happen. There are sort of few moving parts. We have snap elections coming up. It looks like coming up towards the end of February. But if it does happen, if they do either look to reopen shuttered nuclear plants, or they look to invest in maybe a small modular reactor program. That will be monumental for Germany, for Europe, and actually also for investors. So for any sort of watchers watching this, the backdrop here is that Germany has always had quite a fraught, emotional relationship with nuclear power. In the aftermath of Fukushima, which is in 2011, Merkel, the former German president, she sort of bowed to public pressure and promised a phase out of nuclear energy. That was finally enacted in April 2023. They shut down the last of their nuclear plants, closed the doors on them, seemingly for good, and pinning all their hopes really on renewables. So we are now a year and a half or so on from that decision, and it's looking more and more like a bit of a sort of a self-inflicted wound. We have energy imports are skyrocketing, electricity bills are going through the roof, and the environmental benefits, the consequences of shutting down nuclear, going all in on renewables, and which has meant there's lignite coal has been running a lot. So the environmental benefits haven't really lived up to the promises. So Germany went from being a power exporter, exporting all their cheap nuclear power, to a power importer. And in the last 2 years, we've seen that net shift has shifted to annual sum of 50 terawatt hours. So that's a huge amount of energy. They are now their mix has completely shifted. So that's increased their costs. That cost of imported energy has gone up. It's made worse, obviously, in the aftermath of of what's happened in Russia and Ukraine, sanctions on Russian gas as well. So consumers and the manufacturing base in Germany is really sort of paying the price now. Many companies are looking to relocate overseas. The German economy is faltering. There's what seems to be a slow process of deindustrialization. And the renewables policy, I'm a big advocate of renewables, but that has been incredibly expensive. So the estimates of how much it's cost are contended. So there's not one definite figure, but some put it at upwards of or towards 700 billion euros. We have lignite coal still running, as I've said. So emissions have actually only come down by about 25%. And there's been certain studies that if Germany had kept their nuclear plants open and potentially even reinvested in more nuclear plants, it would have cost 36 billion euros, and carbon emissions would have fallen by 70%. So I guess that's the backdrop. Now, the key thing here, which is why I think it might happen, they might make a bit of a U-turn in terms of their energy policy and go back towards nuclear, is that it looks like we've got snap elections, federal elections, the back end of February 2025, and it looks like the CDU party, the Christian Democrat Union Party, which is led by Friedrich Merz. They look like they're going to take the reins. Now, the CDU has been openly critical of the Green-led coalition for shutting down their nuclear plants. Merz himself, although he has acknowledged that returning to reopening the closed nuclear plants could be problematic and costly. He's also said that he's willing to investigate small modular reactors. Others in his party have been much more open about actually going back to the reopening the shuttered nuclear plants. At the same time, we're seeing the public, according to the latest polling, nuclear, as I've said, has always been, been a very fraught topic in Germany. Actually, the public are now swinging back towards nuclear power. We're seeing a global renaissance of nuclear power, most notably in recent months by big tech in the US, pushing forward the small modular reactors. But governments around the world actually are pushing forward in nuclear programs. Including the UK, of course, and elsewhere, China most notably as well. The public are seeing this, and they're shifting back. The German public are citizens, they're shifting back in favour of actually nuclear power. Now, there's actually also been sort of recent investigations which have shown that the Greens actually misled the public before about the cost of keeping those nuclear plants open. Or returning to nuclear. Actually, it now seems that several plants could be restarted. It wouldn't be that difficult technically. It wouldn't be that expensive, not compared to the Greens' previous claims of how expensive it would be. The public are now, that these figures are all coming out. The public are aware of this. So there's just a much more of a movement now towards nuclear power. Now, obviously, it won't be easy to restart the nuclear plants. They were shuttered with great massive fanfare, but experts are actually saying it's not technically insurmountable. The financial hurdles aren't crazily high, and I think with the right political will and with with public pressure as well, it could happen. I think all will be revealed once let's see what happens with the elections. But I think it could be a massive story really for the sector if this does happen. Small modular reactors actually is that is where it could actually happen. I think the CDU party could really look to push forward of a small modular reactor program. So rather than restarting the old nuclear plants, at the very least they could look forward to going for the quicker construction time, the easier integration into the grid of small modular reactors. So yeah, that's the base of my case, I guess.
Yeah, I mean, it all adds up for sure. I mean, an emotional decision has sacrificed the flexibility and resilience that currently operational nuclear was giving Germany, is giving France, is giving the UK. We're extending our plants. And it reminds me of that sort of old Irish joke of the man who's lost in the fields of Ireland and he asks a local, how do I get to the nearest town? And the bloke says, well, I wouldn't start from here. And really the best thing to do is to have kept them open and running, because now you've spent all that money closing them and it's going to cost a lot more to reopen them. So it's interesting to see that actually small modular reactors, these future technologies, are maybe, once a plant has closed, a more attractive opportunity relative to just keeping operational ones open. So is that where you see maybe the greatest investment implications is in future technology rather than currently operational production?
Yeah, potentially. I mean, as I said, a lot will be revealed once we see the result of any snap elections. It does happen at the end of February, really. But if they did signal in any shape a return to nuclear power, Germany, this is the poster boy of anti-nuclear sentiments globally. They have been they have dragged others down with them actually in terms of the anti-nuclear sentiment. They have really they encapsulated the post-Fukushima malaise of nuclear power, which lasted a decade or so. Germany's big decision to pull away from nuclear power, shut their plants. It was a huge decision at the time. And if they reversed in some way that decision, either looking to reopen closed, shuttered nuclear capacity or go forward with a new programme, which might include small modular reactors, that's just going to give a massive shot in the arm across the board for the nuclear and uranium space. If they can embrace nuclear again, it's going to set a massive example for other countries wrestling with the same challenges of how to sort of decarbonise their grid. I think it will just signal that we are really in a new era, a long-term sustainable era for nuclear energy. So if this does happen and things are moving in the right direction for this massive decision, it will be the big story, I think, in Europe next year if that happens. Certainly in the energy space, it's going to be huge. And for investors, you'd want to get on the right side of this now, because the nuclear and sort of uranium space will surely do very well if that happens.
Yeah, indeed. And thanks for running us through it. Nuclear has always sort of fascinated me and us, James, in terms of the gap between the political mindset about nuclear is so wide against the sort of scientific energy transition community. You won't find, an IEA worker or an insurance company worker who doesn't see a very strong place for nuclear within the broader energy mix as we move towards a more electrified future, a lower carbon future. But politically, it's this entirely different thing. And it just seems that there's, a wide gap in understanding between the reality and the political views. And Fukushima is a great example where, the great tragedy was the tsunami, not actually the nuclear accident, which killed or harmed, I think, incredibly few people, while the tsunami was the thing that caused the great destruction. But they've sort of been joined in people's minds. So it's just one of those where not necessarily disinformation, but misinformation or misunderstanding seem especially rife. So looking at nuclear and the opportunities that are there is definitely worth investors' time. Now, to fans of Sam Volkering, I have to apologise because you've had to wait a long time, but the moment is now. And Sam, you're not going to let them down. We've got a couple of belting predictions here. Very interesting. You're going to keep people thinking. The first one will seem incredibly outlandish to a lot of people, but is, if anything, the lesser surprise of the two predictions. So could you talk me through your expectations for the first strategic Bitcoin reserve in America.
The funny part is while we're talking about Germany fumbling the ball, Germany fumbled on Bitcoin just a few weeks ago when they sold a whole bunch of Bitcoin that they'd seized. And I think if they'd held on about 3 weeks longer, they would have picked up an extra couple of tens of billions of dollars in offloading their Bitcoin. But the Bitcoin Strategic Reserve, it almost doesn't feel like this is a prediction. It feels like this is just by the way, this is going to happen probably in like January, where the expectation, but let's call it a prediction, is that Trump is going to sign into law America's purchasing strategy of Bitcoin to add as a national strategic reserve to back the American economy. And I know so many people watching this will be skeptical of Bitcoin still, and they'll think this is the most utterly ridiculous thing in the world. And it is until it happens. And then it's not so crazy anymore. But even in the last week, we've started to see talk of Russia doing something similar. And you can bet your bottom dollar that Middle Eastern countries are either already starting to do this. We do know that countries are starting to put into place mining operations. We know Bhutan, of all places, has a strategic reserve of Bitcoin. But for America, the world's most dominant force politically, militarily, and economically, to actually look to add what is said to be up to 1 million Bitcoin. So over the space of, I think it's 5 years, it's said that they're going to add 200,000 Bitcoin a year for 5 years. That puts Bitcoin a little bit more on the roadmap if it hasn't already reached everyone's roadmap as it is. Now, if that's happening, I mean, we've talked a lot about demand supply shocks in crypto and in Bitcoin before. But if America decides to add 200,000 Bitcoin to their treasury for the next 5 years consecutively, while in competition with corporations like MicroStrategy and Mara, Semler Scientific, Coinbase, all of the Bitcoin miners, Riot, you name them. That's a sizable. Oh, I forgot about the ETFs too, and the demand from the ETFs. There's some sizable demand on its way coming for that. So the prediction, if you want to call it that, is that America is going to sign in a Bitcoin strategic reserve. And you don't have to be a rocket scientist to think that if that happens, we're going to see another pretty sizable price surge in Bitcoin. So I think, it's not an overly complex prediction to make. I don't need to talk as long as the other guys have on that one, but I think that's what's coming. So strap in.
Yeah, well, I mean, it's particularly interesting to think about in the context of the last 2 years. I mean, we've mentioned Russia-Ukraine in this video already, and one of the big moments for that was the freezing of Russian US dollar reserves by the American government. And what that has meant ever since is that central banks across the world, especially those who fear that they might not be America's favorite country in the world, are trying to diversify their reserves away from US dollars, which is the basis of what most companies hold in reserve to back their currencies or for a rainy day. And what they've been doing, and China has been leading this, is buying gold. And we can all see what that's done to the price of gold, and central bank buying has been the dominant force in that move. So if you are right, and we do see a similar sort of US begins this idea, following Bhutan's lead, as they always do, then that becomes a global trend, and we see the price impact with gold, and it will happen with Bitcoin as well, if you're correct. So yeah, it's an expectation, maybe more than a prediction. I'm very interested to see how that story develops over the next 12 months. But closer to home, I mean, I mentioned the political chaos across the world: South Korea, Germany, America. And in the UK, I've sort of felt blessed by the stable change of power, the smooth transfer of power from Conservative to Labour. Some of the talk early in Labour's new term has been pretty negative, but they're trying to turn that around. They're doing some reasonably sensible things. Like it or hate it, it's stable, it's reasonably centrist, that's all okay. But you think that my centrist dad views will be crushed in the near future. Could you tell me why?
Yeah, I mean, I thought I'd throw something in because I knew there was a lot of talk about America in this this recording that we're doing. So I don't think I've ever seen such the buyer's remorse from the results of an election, and I've seen my fair share of political backstabbing and exchanges of prime ministers that never went to a national vote here in Australia. And then it ended up finding its way into the political system in the UK. And now for some reason, everyone thinks that that's just going to stop. I don't buy it. I mean, everything Nick said about Trump, you could probably just substitute Keir Starmer into the mix as well. I mean, he's outlived the lettuce so far. But I don't think he's going to survive 2025. And it's not even necessarily going to be from, I mean, who knows where it could come from, but I just think that his own party is going to be so disappointed with how poorly he continues to be received by the public and the polls, because we know that they love their opinion polls and they love their polls when trying to decide who to knife in the back next within their own party. They're just going to be so poorly. They're going to lose so much ground, and in particular, they're going to lose so much ground in polling and in public confidence to Reform UK that internally within the Labor Party, they're just going to have to say, right, you're done, Captain Cardboard. Let's move on with somebody that's got a little bit more gravitas and can actually drive this party forward. And so then your next logical step is Angela Rayner. And I guess that's a bit like substituting David Cameron for Theresa May. That's not going to really work that well either. And you'll probably find the Boris Johnson of the Labor Party, Ed Miliband, rise to the top out of nowhere and seize power, by which everyone will just go, you've got to be kidding me. And a no confidence vote in the government is given, and we're back at a general election at the end of 2025. The Labor Party is as big a shambles as the Conservative Party. Reform's not that far off, but they are gathering votes, momentum, money. You may have seen Nick Candy's thrown his support behind Reform UK in the recent weeks. There was rumours that Elon Musk is going to throw some money behind Reform UK, of which he sort of loosely denied, but that may come through other means, you would think. He's been very critical of the UK government as well. I just can't see how Starmer lasts the year, and no one wants Rayner to follow suit. So if Ed Miliband ended up as the leader of the Labor Party by the end of the year, I wouldn't be surprised. But I think that if you think it's stable now, 2025 is going to shock you, Kit.
Yeah, well, I mean, there's some really interesting elements to that. I mean, firstly, as I mentioned, we do feel like a bit of an outlier in the UK at the moment, with quite a smooth, simple step to the centre-left, whereas most of the rest of the world is pushing further to the right. We're seeing it in France, in America, and in various other places too. So sort of the pressures, the debt burdens, the inflation, the struggling economies, that's the source of the, I guess, dissatisfaction that is pushing people out to the two extremes. And you are right to mention the momentum with Reform at the moment in terms of the financing they have. But on the other side, I would say that your prediction maybe reflects, and I speak hopefully more than anything, the conditioning of the last 10 years of Conservative rule, where you say that Labour might be as unstable as the Conservatives, but they've had one leader in the last 5 years, and the Conservatives have had about 22. And I think the leading tenets maybe of the Starmer government are seriousness and durability rather than, as you say, gravitas. But when I look around the world, maybe I'm okay with seriousness and stability instead of gravitas, and that the trade that you suggest might not be the one best making.
I purport that you might be satisfied with that, but the rest of the United Kingdom is not. And I wouldn't even be surprised if the Conservatives and Reform UK absorbed one another to become the main opposition in that instance as well, and that the political landscape shifts more to, it's a bit like, you know how like you've got north, you've got like west, you've got like northwest, and you've got like northwest. I think they would be more like center right, kind of something like that. And I think that outside the M25 is going to have a lot bigger sway and say to have than maybe they have in previous years.
Yeah, I mean, I think the basic premise and what we're seeing over the world is that incumbents in developed markets are being rejected, whoever they are. But I think it's interesting that you say that the rest of it might just be me, but the rest of the country would disagree. I mean, we had a national vote pretty recently and it was pretty clear and they all chose Labour. So I think how the first 3 months is not how we should judge it. We should think in 5-year periods, which is what I hope they're doing, unlike their predecessors. But
in here, I think it was 2007 when Kevin Rudd ran on the platform of, I'm literally the other bloke, just give us a shot. It has a lot of familiarity to that, the election that just went past.
Yeah, that is what it is. Now, to the four of you, I mean, one of the really interesting things about speaking to all four of you is that you come at the world with such different angles. But so much of what we've spoken about today joins up. We have US stock markets at exceptional highs. We have political troubles across the world. And we have energy at the heart of a lot of those in terms of the decisions that have been made or are being made and the difficulties that different countries are facing in meeting the climate crisis, but also meeting the economic and social needs of their people as well. So maybe for a final word from each of you, what I'd like to ask is all of the challenges that we've talked about, which ones do you see just getting worse in 2025? So something that someone else has talked about in this call, which do you just see not changing, but going even further to an extreme next year? Nick, you started off today, so why don't we start with you now? No time to think about it.
Yeah, I'm a bit worried about the nuclear renaissance. I'm worried that it doesn't make much sense to pair large amounts of renewables with nuclear power, because especially large-scale nuclear power, I think SMR is much more promising. But I think large-scale nuclear and a system that is very heavily renewables is a uniquely bad combination. And so I'm worried that nuclear won't get the credit or the enthusiasm or the support that perhaps it should, because we just continue to refuse to give up on renewables. So I think investors need to be careful about how they play the nuclear story. I think uranium might not be the best way. Certain sectors of large-scale nuclear might not be the best way. And I think SMRs are much more promising because they offer, companies, communities, towns, cities, all sorts of organizations that are sort of medium-sized to secure their own electricity within the constraints of emissions and costs and reliability and so on and so forth. I think people are going to stop trusting the grid as a national or an international phenomenon, and people are going to focus on how to secure energy for themselves, and SMRs will be that solution. Whereas nuclear on that failing large-scale grid, I just don't think it's going to work. I think renewables have fundamentally changed how that large-scale grid functions, and I don't think the new type of grid and that new system favors nuclear on a large scale at all.
Yeah, it's definitely interesting to see how that's going to develop, and the pressures on national grids and the shortages that they're facing connecting all these new projects are definitely something to be worried about, although I, as always, should specify my intense and fundamental disagreement with your views on renewables in general. But moving on, James, now that I've disagreed with Nick, you don't have to, but now you have an opportunity to comment on someone else's prediction and see what you see, say what you see getting worse next year.
I'd probably take issue with Starmer being kicked out of the being prime minister next year. I think he has obviously got off to a tricky start. I don't think it's helped. There is a cabal of right, or increasingly right-wing newspaper editors and publishers of the mainstream media who seem to have not really given him a fair shake straight off the bat. I think he's been under attack from all sides straight away. Really, I think he hasn't been given any form of time to sort of settle into the job. He's just been straight at it. I think what you said before about the Conservative Party, that they're how many years they had, how many prime ministers they went through. What Starmer has done so far doesn't, it seems doesn't compare to what the Conservatives did over their previous tenure of government being in charge. So, there was a recent poll on, I think was it on Twitter or tried to get some. There was a poll about we need an election now, and it did get some momentum. But let's remind us that in the aftermath of Brexit, there were all sorts of millions and millions of people trying to champion for a new referendum. That online poll got to 20 odd million or 10. I can't remember the number. Huge amount, dwarfed this one, and there was of course no second referendum on Brexit. I don't think it's going to happen just yet. I think hopefully there'll be. I say this. I'm a centrist like you, Kit, but I think once Starmer's policies potentially come through next year, things will sort of settle down a little bit. And yeah, I like you. I like the stability that we've had in recent months, really, compared to other nations. So I don't see that happening in terms of an election or going back to reform. Well, you have to watch out for reform. Obviously, they are, as Sam mentioned, they are getting financed. They are getting some traction. And Farage, as we all know, is a crafty operator. But I would say I don't think. I think Starmer will still be Prime Minister by the end of 2025.
Interesting. Thanks for that, James. John, we're coming to you next for your comments on the rest of what we've spoken about today.
Well, if we're talking about the trends that we currently see getting worse, I'm going to flip that around. I think there's one trend we see getting better. I mentioned it in passing earlier, which is basically that we have a not insignificant country that is trying something completely different than everyone here in Europe and in most countries around the world, for that matter. That's Argentina. I mean, Argentina is giving the world a bit of a controlled experiment now, showing you that maybe there is another way to deal with some of the economic stagnation that has taken over so much of the world. And so far, following his first year in power, Milei has met with tremendous success. He's still popular with the public. You've seen the economic data begin to confirm that some of what he's doing is working. And so I think that could become kind of a virtuous circle of success begetting success, which will stand as an example for the entire world to consider as a possible solution to economic stagnation, malaise, ever more debt, deficit, so on and so forth. So I'm going to predict that Milei is going to have yet another successful year, turning Argentina around and setting an example for the rest of the world to follow, or at least consider following.
Yeah, hugely interesting. I mean, what's happening in Argentina is fascinating. I particularly enjoyed your use of the word malaise to describe what came before Javier Milei. Now, Sam, coming to you last, what have you got for me?
Well, I really liked what John actually just said. It's funny. It reminded me, if anyone watching is an F1 fan, it's a bit like when it's wet and they're all on wet tires, but then it slowly starts to get a bit drier, and then one of the lowly teams sends out one bloke on the slicks just to see if he can get faster track time, and then everyone's kind of a bit sketchy about it, and then all of a sudden he starts bolting in these unbelievable times, and then everyone goes to the slicks. I think that's what's going to happen. So that made me laugh. But anyway, my fear is that regulation in Europe and the UK, particularly around artificial intelligence, continues to get worse, stymieing innovation and really just letting America run free as the dominant force when it comes to AI, high performance computing, ultimately into quantum computing as well, because that gap is just going to get so wide that Europe and the United Kingdom will end up being irrelevant when we're talking about this. Capital just goes to America. And if regulation continues to get worse, more so in Europe than the UK, but the UK is not far behind it. If regulation continues down the track it's going, they're going to regulate themselves out of relevance. So that's my fear for that region. But in the flip side, if this efficiency program, off the back of successful efficiency programs in Argentina, continues in America, then America is just going to absolutely fly, and the market there is going to fly. And 2025, we're going to see IPOs. We're going to see mega and super IPOs in the US markets. A lot of AI is going to continue, and it's going to be a bit of a melt up in that sector, I think. So with the bad comes the opportunity as well.
Party like it's 1999 in America. Right, now, the blessed thing about hosting these talks is I get to have the final word. And this is it. I think one of the things that ties together all of your fascinating comments today, your answers, is the importance of expectations. So to touch on Keir Starmer, the expectations were hugely high. People thought that they were going to come in and within 2 weeks, all of the problems they had in their lives were going to be solved. All public sector workers were going to get incredible pay rises, growth was going to return, and we were going to turn zero carbon overnight. And the expectations were just so high. And I see that as a prime cause of the disappointment that we've discussed that is very, very real. And we've also talked about US exceptionalism in the stock markets and the possibility for a recession there. And the reason why John's prediction, I guess, is so threatening is that the current expectations bedded into American stock prices are really, really sky high. So while there's absolutely a possibility of what you just said, Sam, of that party like it's 1999 atmosphere, of the IPO market returning, AI and quantum computing, and American innovation and deregulation driving the markets higher, there is also a very real risk that a reversal of the last 15 years of American exceptionalism and outperformance has a very high cost, that the downside really does balance out the potential upside too. So expectations are just hugely relevant to investors. And today, I hope, has helped everyone watch just slightly recalibrate their expectations in terms of things that could change and things that can continue. So while I don't agree with everything that everyone said, I do agree with a lot of what a lot of you said. And I think that's always the story with Southbank, is you get a lot of value, you get a lot of originality, authenticity from each of you on your relevant special areas of interest and expertise. So it's always interesting to get the divergent, conflicting, but always interesting views of Southbank's four editors. So thank you so much for joining me, for sharing your views with our readers and watchers. I hope 2025 is brilliant for everyone watching. That's my main hope and prediction. And I hope everyone has a wonderful Christmas too. Thanks very much for joining us. Bye for now.